So the SPY is setting up for another amazing trading opportunity heading into tomorrow. I'm also going to be walking you through a couple of stocks that are going to be on my radar to trade the zero date options heading into Friday. With that being said, I'm going to be breaking down the trades that were made towards the end of this video. We started off the day on absolute fire, going 3 for 3 on SPY call options, using the 30-minute confirmations, using the breakout and retest strategy as well, at that previous closing price that I gave you yesterday towards that 577 level. With that being said, I'm going to be breaking down the overall trades that were made. Let's get straight into the analysis. So in terms of the SPY, let's get into the game plan. It's going to be very simple. In terms of the game plan that I'm seeing, let's start off if we gap up. So as you can see, we closed at 579.24. If the SPY is opening up higher than the previous closing price and it's starting to have a gap up, it could potentially just keep on running throughout the day and have a bullish day. And then later on throughout the day, it could have a nice little drop. With that being said, in terms of one of the patterns that I'm seeing, you can see right here, we have a red candlestick on the daily chart. Then you have the green candlestick on the daily chart. Then you have two slanted red to the downside. Next day it gaps up, ends up, being a great opportunity to buy call options on the dip towards open, has a nice breakout, has a little drop, right? And then you could see that similar pattern happened again as well. You have this red candlestick on the daily chart right here, green candlestick right here, and then you have double red slanted right here. And then the next day it gaps up and it does the same thing I just showed you, right? So with that being said, you can see right here, we have this red daily candlestick right here, green daily candlestick right here, and then double slanted red to the downside. This pattern right here, in terms of how the daily candlesticks look, it looks very similar to this one in a sense. So if we are gapping up, it could potentially keep on running. In that situation, if we are gapping up and you're looking to buy call options, I want you to be extremely careful because there are two potential levels where we could potentially drop, right? So if we are having a nice gap up and you are looking to buy call options, I would encourage you to use very strong confirmations. Be very meticulous in terms of the confirmations that you're going to use and raise your standards in that overall situation, and be careful on puts as well. But it's going to be a little bit difficult in that sense. But in terms of where we can potentially drop, keep an eye on this zone of like 580.70 and that level that I gave you yesterday, that 581.30. Remember how I told you when SPY hits 581.30, it's likely going to drop? This week, we had two phenomenal levels play out during the pre-market trading session, man. It hit that level for puts, that 581 that I gave you in last night's video, and it had a hard sell-off to fill the gap. And then once it filled the gap, there was very nice reversal confirmations on the 30-minute chart. So 580.70 is make or break resistance. And the best level for put options heading into tomorrow would be at the gap. Because if we do gap up at some point throughout the day, it's supposed to have a nice little pullback. So like I said, you can keep an eye on 581.30. And then in terms of the best level, you can keep an eye on 583.30. This level, not too special in a sense. But actually, yeah, 581.30 to 581.60. That's going to be the first overall zone to keep an eye on. The best level for puts is going to be 583.30. And then in terms of if we are gapping up, if you are looking for an entry using those confirmations, keep an eye on pre-market resistance. And in that sense, the main strategy that you'll be using is like a break and retest, right? So you're looking for a break above some sort of resistance. So in terms of the SPY, we have some resistance right here at 580. You're going to want to focus on lower levels if we are gapping up. So you got a lot of resistance at 580. So if we break above that, react to support, we're going to be going to 581.60, make or break. It could try to drop first. But at some point, if we are gapping up, it is going to try to drop. So keep an eye on that 581.70 and then keep an eye on 583.30. That's going to be the overall game plan if we gap up. You can attempt calls, but use a very strong confirmation at lower resistance levels, 580 or pre-market resistance, break above, drop back down, retest, look to get in, use very strong confirmations. If the confirmations are there, avoid it. And then in terms of puts, you can keep an eye on 581.30 to 581.70. True best level is the gap reversal at 583.30. Now, in terms of other patterns that I'm seeing on the daily chart, so if we're having a small gap down, or if we're just kind of opening up flat, I would encourage you to just kind of wait to buy call options towards the lower levels. So in terms of another pattern that I'm seeing, and I'm going to show you a very similar pattern as well in comparison with Apple stock. So you can see right here, we have, in terms of the overall SPY, you're going to see we have this red, green, red. We have this red, green, red, slanted to the right side, slanted to the right side. You know, this candlestick's green, but it looks very similar to this one right here in a sense, right? And then the prior candle was very similar. So in terms of the next day, it kind of just opened up flat. It didn't really do too much in a sense, and it bottomed towards the previous day lows. So if we're not really doing too much, or if we're gapping down, the main focus, if we're gapping down, or if we're opening up flat, would be the following. If we're gapping down, you can keep an eye on put options potentially at 580 towards the high of day, 580. You can also keep an eye on 581.30. Also keep an eye on pre-market highs, right? So if we are gapping down or even opening up flat, I would be more interested in put options towards those lower levels with the right confirmations, man. I'm telling you, you got to be extremely careful heading tomorrow so use strong confirmations. Now, if we are gapping down or opening up flat, for call options, I'm looking at the lower levels. So I'm looking at the lows right here at like 570.70 to 576.50. And then I'm looking at 575. That'll be the game plan if we're opening up flat or if we're gapping down. Those are the two game plans using the daily chart. Now, I want to quickly review some stocks I have for you. So in terms of Thursdays and Fridays, right? Especially on Friday, this is when the zero dates are going to be expiring on a lot of stocks. For SPY, it has zero dates every single day, right? So Thursday and Friday will typically show more interest in trading stocks and not just SPY. I do have a couple setups on my radar. Nothing too crazy at the moment, but Apple is the one that I'm liking the most. But heading into tomorrow, you know, I have my scanners set up and I know exactly in terms of the criteria, the checklist that I have and what it is that I'm looking for, right? So there's going to be many lucrative trading opportunities on these zero date options for stocks heading into tomorrow, man. The best time to trade the zero dates is going to be on Friday for the stocks, right? That's when a lot of these stocks are going to have their zero dates, expiring on overall Friday. And then the day before that, they can be fairly cheap in certain situations. But the main ones that I'm seeing are going to be the following. So Uber is an interesting setup. Uber has some resistance right here at 78.30, has some resistance right here at 78. It has a gap that filled right here at 77.92. So as you can see, when Uber had a break and a gap up and a gap and go above this resistance, it was a massive move to 87. And then it quickly dropped back down and lost those gains, right? And then it's starting to bottom at the previous resistance to potentially react as support, right? So in terms of this trading strategy, that would be a breakout and retest. You know, the Uber ends up gapping up above this resistance. It has a breakout and then it drops back down. And then there's also a gap that's waiting to fill right here. So it's a breakout and retest, right? Has a break above resistance, drops back down. It could potentially reverse, react to support, right? And then there's also a gap here. So it could potentially reverse at this gap at 77.92. And it did end up closing above the gap, which is a good sign. So Uber, in terms of that strategy, is going to be a breakout and retest combined with a gap reversal. When you're using the breakout and retest strategy, you will notice many times there tends to be gaps towards that previous resistance as well. It's a deadly combination to be buying call options with the right confirmations. In terms of the confirmation that we're seeing, we're seeing a lot of similarities where Uber can potentially have a strong bullish trend day, right? So you're going to see right here, in terms of Uber, you're going to see right here, look at this bullish daily candlestick. And I want you to look at, this bullish daily candlestick. And I want you to look at this bullish daily candlesticks, right? You're going to see so many similarities where it just keeps on pushing up higher the next day, keeps on pushing up higher the next day. A phenomenal confirmation that I'm seeing based off that daily chart pattern would be a gap up. If Uber is gapping up, that's going to be a phenomenal confirmation to be buying call options heading quickly into the market open, right? You can see right here, there was resistance on Uber as well, right here towards this 72 level, has a nice break above the resistance, drops back down, reacts to support, breakout and retest, green bullish daily chart pattern. Next day gaps up, strong bullish close, right? And then you can see the same thing here is forming in a sense. So I'm telling you, man, if we're gapping up, I'm looking to buy calls on the dip. I'm looking to buy calls on the open. Ways to look for entry is look at the pre-market resistance. The pre-market resistance will help give you the new breakout and retest overall sense. But like I said, man, I'm really just trying to get in on these Uber all calls if it's reacting bullish at the previous closing price, 578.38, or if we're gapping up, the best confirmation is a gap up and then sell into the move, set profit stops. The first target would be $79. The second target would be $79.80. That should be a phenomenal setup heading into tomorrow, especially if we're gapping up. That's the best confirmation. GME The problem with this one is, you know, it is lacking the volume. That's the biggest issue. So in terms of this one, the biggest problem I'm having with this one is it's lacking the volume, but I am seeing a daily chart pattern. So if I do trade this one, I'm just going to size in very light because it is lacking that volume, and there's going to be many more better setups likely heading into tomorrow, right? So this would be the worst setup that I'm seeing in a sense, but I did want to just quickly point this out. You can see right here, whenever GME forms these dojis at key support, it tends to have a very nice spike, But like I said, it is lacking volume, and you could see there's a nice doji right here, has a nice spike, and we just formed the doji right here. So I'm just going to be keeping an eye out, man. I'm going to be keeping an eye on this support at $20.30 to $20.50. If we're reacting bullish on the chart in between that lower oversold range, because I did notice with this particular daily chart pattern, finding an entry could be a little bit difficult. So in that situation, I'm just going to focus on the lower oversold levels if it hits those. So, you know, I'm looking at $20.30. I'm looking at $20.50 for just a potential quick scalp on, you know, GME to potentially $21 a share. Just something I'm keeping an eye on. Now, Apple. So Apple and Uber are the best setups that I'm seeing. Apple is looking phenomenal. So in terms of Apple, this is what I'm looking at, as you can see right here. Green, red, green, slanted to the right side. Green, red, green, slanted to the right side. In terms of the next day it tops towards the previous closing price. So if Apple is reacting bearish towards that previous closing price, I will be keeping an eye on for puts, but I'm not really interested on puts because based off of what I'm seeing, you know, with the SPY and with Apple on the daily chart pattern, the overall trend could be bullish. So the best play, if it's opening up flat or gapping down, would be to buy calls towards the oversold levels, which I gave you on SPY. And the oversold level is going to be the lows. So 228.30 on Apple and 227.80. As you can see right here, it had a nice drop from the previous closing price. You know, and it had a nice drop from the previous closing price. And then in terms of that situation, you're going to see it ended up bottoming towards the previous day lows. So you can keep an eye heading into like early in the morning. If Apple is reacting bearish early into the morning towards this, you know, 531 and it's reacting bearish, especially if it's gapping down, you could try puts. But the true best setups that I'm seeing heading to tomorrow is going to be buying call options if we're opening up flat or gapping down towards the oversold levels, because SPY and Apple can potentially have strong bullish days. And like I said, it gets a little bit more difficult and tricky if we're gapping up, right? But I'm telling you, man, if we're just opening up flat or gapping down, Apple calls towards this like 228.50 zone, the 227.80 zone, and it could potentially be puts, especially if we're gapping up down early in the morning and you're seeing resistance at the previous closing price, 530.50. You can attempt puts, but just to understand in terms of that situation, you'd be going against potentially the overall trend on the day. So just keep that in mind, right? Make sure you're using strong confirmations if you're going to go against the overall trend. With that being said, those are the main plays that I'm seeing. It wasn't too long ago in terms of swing trading. I do enter swing trades. I told you guys, man, this was a phenomenal swing trade. You know, ANF, Abercrombie, this was a phenomenal swing trade. If you guys took it, man, if you go back and you watch the videos that I posted weeks ago, I mentioned this 2 or 3 times to be buying calls at the gap. Remember, I told you the gap was right here at 131, and then it closed the gap, and I told you it's starting to form the green bullish daily patterns, green, red, green, higher support, a lot of bullish daily candlesticks. It finally rocketed up to close that gap. And the gap was at 166.30, which is where I told you to sell. And then I even told you in the video, if you see a bearish daily candlestick, it's likely going to start selling off and reversing. So it had back-to-back gap close reversals, man. You got to follow the gap reversal strategy. It's the best trading strategy within the overall market. Once it filled the gap, it reversed the gap, and then it shot up to fill this gap. Once it filled this gap, it reversed the gap. Then it started to come back down to fill this gap, right? So we can keep an eye on this 134.50 in the future. But big shout out if you ended up swing trading ANF calls, because those printed like crazy, man. Now, I'm not really gonna have that on my radar until this gap fills at 134. Just wanted to quickly mention that and just kind of go over that strategy with the confirmations. You got to use confirmations on the daily chart with that strategy. But in terms of the next play is going to be DJT. So at the moment, I don't have too much to say about this, but I'm obviously going to be focused on call options, man. I've just noticed when DJT, when it forms all these like trend reversal candlesticks and these trend reversal candlesticks on the green side, it tends to push higher. So you know, you can see there's just a lot of similarities in that pattern, especially if this has like a big drop. I'm going to be interested in buying the dip, right? So this is just something I'm keeping an eye on. It's a phenomenal one to trade options on Thursday and Friday. So just something I'm watching, just something I have on my radar, right? But yeah, those are the main ones that I'm looking at now. With the scanners I have, tomorrow there's going to be a new list, and there's going to be phenomenal fucking setups, man. Last Friday, we had a CVS play that went up over 500%. We got it at 20 cents or 24 cents. It went to fucking 150, man. I'm telling you, Fridays are the best days to be trading within the market in zero-day options. They offer the highest risk-to-reward ratio plays, and they offer plays with the setups that I offer that are so fucking rare, man. These blue chip stocks, a lot of these stocks, they can have massive gap downs, and it could be great opportunities for reversal. They can have massive gap ups, great opportunities for reversals, and the option contracts are so fucking cheap on Friday. So I'm telling you, man, there's so much opportunity out there. If you have your eyes on the right stocks, the right setups on Thursday and Friday, there's phenomenal trading opportunities using the gap reversal strategy, using the breakout and retest strategy, the breakdown and retest strategy, using the 30-minute candlestick strategy. I'm telling you, this is where you're going to see me go in full beast mode and just be in my prime and typically making more trades than usual, because there tends to be a lot of fucking setups, and the setups could be fucking amazing, man. So with that being said, there's going to be new stocks that pop up tomorrow. I'll be all on that. Now, in terms of the trades, man, let's get into this. So I start off the day 3 for 3. I'm going to break this down here for you. So I'm not going to be explaining to you on why 577 was a key level. You have to go back and watch the previous video, right? That gave me the foundation for this trade. So I ended up trading at my key level, and it worked out phenomenally using the 30-minute chart, right? I'm not going to be explaining to you why that was a key level. Go back and watch the previous video. Now, in terms of 11:54 a.m., so this is more of a confirmation. Yesterday, I gave you the foundation. I gave you the plan on why this was a key level. Now I'm showing you the confirmation, right? So 11:54 a.m., my trades are basically fucking confirmations to get in as well. I ended up buying 579 calls at 48 cents. Every single day, this first trade that I've been making, it's just been fucking killing it. Now, with that being said, if you go to SPY here, I'm going to show you and I'm going to walk you through the confirmation that I used to make this overall trade. So you can see the SPY ended up having a gap up, and it did end up selling off in the pre-market from the best level I told you to buy put options on. The second best level I told you it's likely going to drop versus 581.30. And there were so many red bearish 30-minute confirmations, man. There was confirmations to get in on puts. You could see just at a very similar price. Look at this pattern, man. You should have been all over this, because I gave you the level for puts at 581. And it topped in the pre-market, which is bearish, right? If we go to the pre-market, I'm going to show you, man. This is reasons why you actually should have bought puts at market open, right? So I'm showing you. You guys know me. I like to wait to trade later into the day. But, if you just look in the pre-market, there were so many bearish patterns. Look at this. Look at the pre-market. Look at this pattern right here. You have this red bearish candlestick facing to the upside. You have this red bearish candlestick facing to the downside. And then the SPY sells off, right? So you have this red bearish candlestick facing to the upside, red bearish candlestick facing to the downside. Do you see the correlation between those two patterns? They are identical. And it was at that level I told you where it's likely going to drop. So it was at that level where I told you it was likely going to drop, and it's the first time that it hits the level, meaning it's likely going to work first. And the perfect confirmation was there just using the 10-day, 30-minute chart. So that pattern alone, you should have been bearish. And look at how fucking identical the 90-minute chart is, man. Look at this. Look at the 90 minutes. You see this, and it's at similar prices, and it's at the level I gave you. Do you see that? That 90 minutes is identical. That 90 minutes is identical. It flushes. It flushes. Has a reversal later in the day. Has a reversal later in the day. Look at this. And then look at this candlestick right here. This red bearish candlestick pointing to the upside. This red bearish candlestick pointing to the upside. Reversal. Reversal. Do you see those fucking similarities, man? You should have been all over puts if you wanted to try at that level, right? So it topped out at our best level in the pre-market. And if you remember earlier this week, it bottomed at one of our key levels at 582.50 in the pre-market. It then didn't work the second time. It always works best the first time. That's when it's likely best to work, especially if you're not going to use a confirmation. But in the pre-market, there was a confirmation. So with that being said, in terms of more further reasons to just be bearish with that pattern alone, look at the 30-minute chart developing, right? You have that same pattern. You have that same fucking pattern right here. This, and I talk about this one all the time. Do you guys remember this particular pattern? If you go back and watch the previous videos, you should remember this one. This is a bullish reversal pattern on the 30-minute chart. Red facing to the downside, red facing to the upside. Next 30-minute candlestick, buy call options towards the open, sell into the rip, right? That was a very nice move to buy calls towards the lows here. I talk about that pattern all the time. red facing to the downside, red facing to the upside. Next 30 minutes is going to be a bullish spike, buy on the dip towards the previous 30-minute lows. That was another trading opportunity with my education. So right there alone, that's 2 opportunities with the education that I give you. Now, in terms of more confirmations for puts, SPY has a gap that's waiting to fill below. It's going to try to fill that gap below. So in terms of that strategy, if you watched the video yesterday, that was a breakdown and retest. There was support at 581.30. It cracked that support and it never spiked back up. And then it ended up, gapping up and spiking back up. And the breakdown retest is going to try to drop first to fill the gap below, right? And that's exactly what happened. And the red bearish 30-minute confirmations were there. And then there was a nice little 30-minute spike pattern here that I teach you. And then in terms of more bearish confirmations, if you just look at this overall chart, man, you're going to see. Look at this. This is fucking identical. You have this red bearish candlestick facing to the upside, red bearish candlestick facing to the downside. Next 30 minutes is bearish. You have this red bearish candlestick facing to the upside, red bearish candlestick facing to the downside. Next 30 minutes is bearish. You have this red bearish candlestick facing to the upside, red bearish candlestick facing to the downside. Next 30 minutes is fucking bearish. And there's a gap to fill below. So it's going to try to fill that gap below, right? So if you just look at all these fucking patterns, man, and then this candlestick right here, this overall red bearish candlestick right here, this red bearish candlestick right here continues to drop, very similar compared to yesterday, right? So with that being said, those are the reasons to be bearish at the market open. None of you should have been in on call options if you used the information I gave you yesterday. You should have been buying puts. It topped the key level. All the bearish patterns were there. It was a fucking replica compared to fucking October 23rd. Now, in terms of the calls, you're well aware I want to buy calls at 577 to 578. That was my call zone, the previous closing price, and then 577. Those are levels I was watching, right? So in terms of what I was seeing on that, I was looking at the previous day. I was saying, wow, this is an exact replica of the previous day, and it did end up reversing later on throughout the day. There was also many bearish 30-minute candlesticks. We had 6 red 30-minute candlesticks in a row towards the normal trading hours, and then you had 2 in the pre-market. You had 8 in total. Typically, when the SPY has 6 bearish 30-minute candlesticks in a row, it tends to have a short-term reversal on the 30-minute chart. And it recently happened as well. So when I say that, I'm always focused on 10-day 30-minute patterns repeating itself, right? So you can see right here, we had 1, 2, 3, 4, 5, 6 bearish 30-minute candlesticks. Next 30 minutes, it bottomed the previous 30-minute low, and then it had a very nice spike, right? So that's why I wanted to buy calls. It was at my key level. It double bottomed. And this red 30-minute candlestick right here is very similar to this red 30-minute candlestick right here. From a macro perspective, it's forming higher support and it's trying to reverse at the gap. Using the foundation of my key level, using the gap reversal trading strategy, if you look at the 30-minute candlestick close, 30-minute candlestick close, 30-minute candlestick close, for an hour straight, the SPY is closing above the previous closing price, right? And it's forming these strong bottom wicks at the key levels that I gave you yesterday, very bullish, right? And it had the 6 red slanted 30-minute candlesticks, which is a bullish reversal overall pattern, right? This gave me all the reasons to buy call options. So with that being said, once this 30-minute candlestick closed like that, I ended up buying the call options towards the opening of this 30-minute candlestick, and it worked out phenomenal, man. So how many more bullish confirmations can you ask for, man? This red pin right here, this red pin right here, and hours of 30-minute candlesticks closing above the previous closing price, the key level I gave you to buy calls yesterday, right? It's bottoming in between the bullish zone. 6 red slanted to the downside. It's reversing at the gap reversal strategy. Do you understand how many gap close reversals the SPY has had throughout the past 10 days? Look at this. There's a gap here. It reverses at the gap. There's a gap here. It reverses at the gap. There's a gap here. It reverses at the gap. We crushed on puts that day. There's a gap here. It reverses at the gap. There's a gap here. It reverses at the fucking gap. Every single fucking gap has been reversing. This is the best fucking strategy to use within the overall market. So I use my gap close reversal trading strategy along with my foundational key level that I gave you yesterday, and I explained to you how I came up with it. And then I also used the 30-minute chart as the confirmations. This candlestick right here compared to this candlestick right here, it has a bullish reversal. It has a bullish reversal. It's fucking identical compared to yesterday, along with the gap reversal trading strategy. It's like, dude, Who's teaching you this? Who gives you all this information? We trade the chart. We do this in real time. You understand? Everything I'm teaching you, I'm trading exactly what it is that I'm fucking teaching you. You should have been all over these fucking trades today, man. We do this in real time. 11:54 a.m. I tell you all the fucking time. Almost every single fucking trade I make is 5 minutes before a 30-minute candlestick closes, or 5 minutes before, or 5 minutes into a new one that opens up. I'm trading the system. Do you understand? I got the fucking blueprint. I got the map. I got the systematic approach to trading. This is very simple. So I bought these 579 calls at 48 cents at 11:54 a.m., right? And I explained to you exactly why. If we go to 11:54 a.m., you're going to see when I got on these fucking calls, they just exploded, man. Every single fucking first trade I've been making on the day just keeps on fucking printing. And it's big enough to walk away. And if you choose to keep on trading, you risk half your gains at the fucking most. If you give back half, you call it for the fucking day, because then you're risking green to go to red. And we don't go green to over red, especially when we hit a somewhat daily goal. So I got in right here. And I ended up quickly scaling out into that trade. It went all the way to 80 cents in like 6 fucking minutes, man. So the timing was fucking flawless, nearly towards the exact fucking lows in that situation, right? So in terms of that trade, 11:54 a.m., excuse me, that was the power hour one. So I traded this multiple times today. You're gonna see how fucking killer I crushed this overall trade. But let me go to 11:54 a.m. So this is where I got in. So in terms of 11:54 a.m., I'm gonna break this down to you. So I got in right here towards the middle of this bullish candlestick right here. And then in terms of where I ended up exiting that overall position, I got in at 48 cents a contract towards the exact lows down here. And as soon as I got in, it started to fucking spike. And then I quickly got out, in a sense, at 75 cents a contract, right? So at 12:33 p.m., this is where I got out. I got out at the exact fucking peak of this move, man. I got out towards the exact fucking peak before it started to drop at 12:34 p.m. So that was a phenomenal first trade on the overall day. Like I said, literally in at 48 cents and then out at 75 cents, man, nearly 100%. Now, with that being said, I took another trade on 580 calls. I'm not going to be going over this one. I shouldn't have been in it on the first place, but I got it at 42 cents and then I added at 31 cents. And then I sold, the bulk of it for a small win at 45 cents. My average was 37 cents. I sold 60% at 45 cents. And then the rest of it, I kind of just got out at like that down 50% mark. So in terms of the third trade, this one was fucking crazy, man. So many people were doubting that power hour was going to be a big play. They were doubting that there was going to be a big play during power hour, that it was just going to be fucking choppy. Well, the first 30 minutes during power hour was fucking phenomenal, man. This play right here, 2:41 p.m., 579 calls at 36 cents, right? So I bought these calls initially in the 40 cent range, sold in the 75 cent range towards the peak. And then I got back in at 36 cents. And then I ended up adding at 28 cents. As soon as I fucking added, the SPY exploded. So I added 28 cents. The first entry was 36 cents, right? So that put my average at 33 cents. Now, with that being said, on that overall trade, I quickly sold it for 44 cents a contract, right? So why did I rebuy those 579 calls again right as power hour was getting ready to start? So I bought them 11 minutes into that 30-minute candlestick open before the power hour one was about to open up on the 30-minute chart. So why did I decide to do that? So I'm going to walk you through this, man. So I walked you through the first time, the reasoning behind calls. The second time, I believe it had to do with a break and retest, and I believe there was a confirmation for that as well in the 30-minute chart. Let's see. So in terms of the second one, let's get right into this. So in terms of resistance, you could see right here, there was temporary resistance for basically an hour at the previous closing price. The SPY kept dropping under the previous closing price, for an hour. And then one of the reasons why I flipped bullish, because the 30-minute candlesticks kept closing above the previous closing price, which is bullish, along with the gap reversal, along with the 6 slanted red pattern that I gave you, along with the strong foundational piece that I gave you to be buying call options at the previous closing price. With that being said, there was a break above resistance. You could see right here, this was temporary resistance at this 578. The SPY had a break above the resistance at 579.51, and then it dropped back down to test that previous resistance. And there was bullish patterns. So it was a break and retest, markets flipping bullish, previous closing price reacting bullish. It's breaking above that previous closing price resistance. It did react as a resistance for an hour, right? And then you could see green, red, green is a bullish 30-minute pattern. And you have the breakdown and retest with this green bullish 30-minute candlestick. meaning the SPY is going to try to spike back up and retest the high of these wicks at 579.50, going to try to spike back up and retest the high of these wicks at 579.80. That was the reasoning why I bought call options 11 minutes into this 30-minute candlestick, right? And the reasoning for me to continue to hold, once this 30-minute candlestick closed red like this, I began to become more bullish because I compared this 30-minute candlestick right here to this 30-minute candlestick right here, along with the green, red, green bullish pattern, along with the higher support break and retest. And I told myself, if history repeats itself, this is going to be a very strong green bullish 30-minute confirmation, a very strong green bullish 30-minute confirmation, and it could potentially run for an hour straight because that's what it did last time. So if you compare the comparison, if you compare this was fucking identical, man. This was so fucking identical. It repeated in such a similar cycle. That was the reasoning for buying those fucking call options. Do you see these simple confirmations I'm repeating in every single fucking video? Are you guys being self-sufficient and capturing this in real time? All you got to be is disciplined. Once you know how this works, man, you set up the foundation, you set up the plan, you wait for the confirmations on the 30-minute chart. I got the best 30-minute system that prints non-fucking stop, man. That was 3 trades in a row, all wins on fucking calls, man. So with that being said, also more bullish confirmations. It's going to try to retest the high of these wicks when there's bullish confirmations, right? So we had the 6 slanted red reversal pattern. We had the hour above the previous closing price with this 30-minute bullish candle, 30-minute bullish candle, right? We had the green, red, green. We had the break and retest. We had all this fucking reasons to be bullish. This red candle again, this red candle again, bullish, bullish. You see the fucking comparison? So that was the reasoning behind calls. So in terms of that, 3 for 3 on the day with 2 very nice wins. Like I said, say it all the fucking time. If you have 1 decent win or if you have 2 small wins in a row, the most you risk if you choose to continue to trade, and you don't have to keep on trading because you're already green enough to walk away. But for whatever reason, if you choose to continue to trade, you risk half of your gains at the very most. If you hit half your gains, you call it for the day. You cannot risk more, and you should be risking 25% in that sense. If you choose to continue to gain 25 to 50%, whatever you're comfortable risking. So I'm already 3 green on the day. And then in terms of the last 30 minutes, it was not good. The SPX plays were all duds. The last 30 minutes did not work out, which is completely fine. Because when a power hour trading session works from 3:30 to 4 p.m., it's going to be multiple 100% profit returns. Every single month, we're going to have 1,000% gainers, right? So it's not a big fucking deal, especially when you already have 3 wins in a row. One thing I would encourage you as well to add on to that, if you are green enough to call it on the day, 2 small wins or 1 big win should be green enough, right? I would encourage you, if you do choose to risk half of your gains or 25% of your gains, to focus on better setups, man. Focus on better setups than the ones that you made before if you want to add that extra bar. These setups, they just weren't the greatest, man. It just wasn't the overall greatest setup, man. Another reason why it's bullish as well is, man, SPY ran bullish throughout power hour, head into yesterday as well. Very similar day, man. A lot of similarities compared to yesterday. If you use that foundation as well, man, just so many fucking similarities. And then you have this like V shape right here. You have this V shape right here, and then SPY pushed higher into power hour. V shape right here, and then SPY pushed high into power hour. That was another reason why I was bullish, man. It's just you got to have an eye for the market, man. You got to have an eye for the market. You got to be disciplined. But look, man, last 30 minutes, the trades did not work out. Like I said, in terms of me, it was not a big deal because I already had 3 nice wins. I already had 2 nice wins on the day and then 1 smaller win on the calls. And it was all calls. But the SPX trades just didn't work out. I had 2 L's in that situation, man. This was a crazy trade. I was in puts and then I hedged on calls. I'm hedging 5815 calls at 10 cents. Man, the big move happened, but it was on SPY, man. If I would have bought those SPY calls, it would have been fucking crazy. Normally, I would have been on both. But I was looking for, I was seeing a potential play where if you hedge, it makes sense because, you know, SPY could have potentially had a very strong move because that 30-minute candlestick was supposed to close strong based off that overall history. But it was looking bearish on the 1 minute, 5 minute, so I decided to buy puts and kind of go against that in a sense. But the big move happened during the after hours trading session, man. As soon as the market closed, it went from 579 to 579.70. The 579 calls within a minute, they went from 20 cents to 90 cents, man. They went up like 350 fucking % in a single minute, man. Unfortunately, I was in on SPX calls, but I should have got in on both, man. That was such a phenomenal fucking hedge. That's what I'm saying, man. I had this trade on puts. It didn't work out. Well, if you hedge with the SPY calls went up 350% in a fucking minute. This is a numbers game. This is a simple numbers game of percentages. If you know a trader who isn't teaching you how to trade in percentages, the reason why they're not teaching you that is because they don't make percentage gains. If you're not making big percentage gains, they're going to be teaching you in dollars, and they're going to be setting you up in stop losses. You're going to get stopped out all the fucking time, and you're going to have to take massive fucking position sizes to make any gains. And they're going to tell you these small gains add up, which they don't. Those small dollar gains ain't going to add up, man. When you're growing a small account, you got to have something that's cheap. You got to have something that's low risk, and the small gains add up on percentages, not on dollars. If they're going to add up on dollars, you're going to be risking too much. You're going to be stopped. It's not working in that sense, man. I'm telling you, we got the system. If you're serious about trading alongside with us, it's the first link down below within this description. These videos should be improving your trading tremendously. I'm showing you exactly how it is that I'm trading. There's so many systems, so many different strategies I have. This is the best one, and I'm showing you, man, and it's simple. So let me know in terms of how you guys are doing in your trading. If you want to trade alongside with us and absolutely crush it tomorrow, it's going to be the first link down below within the description. We're known for buying cheap, low risk, far the money option contracts. We're known for selling them deep in the money for the biggest percentage gains within the market. The edge to the system is the contracts are so cheap, so low risk, you can have your entire position size as your max risk per trade. There's no other strategy where you can risk your entire position size as your max risk per trade if you're trading with real money, right? Cheap borrow the money option contracts, biggest percentage gains within the market. Our entire position size is the max risk per trade. They can go up unlimited percent. Every single month, we have 3 trades where we make 1,000%. Every single month, we have many trades if you leave runners where you can make 500 to 1,000%. And we don't use stop losses. There's no need to use stop losses because in terms of another edge that this gives us is we don't need to use a stop loss because in terms of risk management 101, if our entire max risk per trade is in the trade, we can just let it go to zero, let it expire worthless, right? If we're comfortable with risking our max risk per trade, which everyone should be, then it's completely fine to let it go to zero. So in that situation, we've removed the stop loss. Sometimes we sell the moves if we're down 30 to 50% and it doesn't make sense to hold, we sell the move. Other times, when it makes sense, we hold when we're down. A dead play is a play that drops 50%. If we are down 50% on a trade and it makes sense to hold that trade, we will hold it. 70% of the time it makes sense to hold that trade, it will go in the money and we will sell for overall profits. But if we set a stop loss, we would have been stopped out for overall profits. If we set a stop loss, we won't be able to see how the stock price reacts at the overall price where we might want to potentially sell the move, right? A lot of traders just use a stop loss as a risk management. It doesn't even have anything to do with fucking the chart. They just set a stop loss because they want to protect their risk management and they size in so fucking big because they don't hold their trades and make big gains. If you want to make big gains, you got to hold your trades. And you don't have to hold for a very long period of time when you're buying these cheap, far low risk out of money option contracts because you can make multiple 100% profit returns if you're trading during the right times, market open, and last 30 minutes of the trading session, right? So holding your trades is obviously going to increase your gains, but if you know how to time them and you know the best times to trade, you don't even need to hold that fucking long, man. So question anyone who's not doing this, man. This is the biggest percentage gains within the market. This is the top tier, best trading system within the overall market. And we set profit stops. When we are green, we set profit stops to ensure that we don't go green to red on a trade. And then in terms of adding, we like to focus on adding to winners because when we're up a little bit, 5, 10, 15, 20%, the winning tends to continue to go in our overall favor. So in terms of that situation, we set the profit stops, we add to winners, and then we move the profit stop up to protect the new average cost and protect the bulk of our gains as the market continues to work in our favor in that situation. And then we get stopped out for profits. We also sell into the moves at key levels. With that being said, that's some of the basics to the system. We have the highest win rate in the game doing this. And, you know, if you don't want to trade far the money options, you can trade other assets with the overall direction if you want. I mean, you could even trade with a prop firm. If you don't want to trade with real money and risk real money, you could trade with an overall prop firm. But I'm telling you, if you want to be the best trader possible, you got to risk real money. That's how you be the absolute best, is you risk real fucking money. So with that being said, man, you can literally, if we're in calls, you can go long. If we're in puts, you know, you can go short, right? You just got to understand one of the edge that options gives us. Options give you options. That's the best part about options. And far out of the money options give you the most options within the market as day trading. Because like I said, we have the entire day, the contracts to go in the money. And if we're down 50%, 70% of the time, when we choose to hold and not get out, it goes back in the fucking money, right? It gives you a very sharp edge within the market where you're not risking a lot to make very massive percentage gains. And since the percentage gains are so fucking big, they're going to be decent gains on your dollars, even though you're not risking a lot of your dollars, but you're still outperforming everyone else. Therefore, the people risking more dollars, you're going to make more dollars than them in a sense by risking less. And that's what rich people prefer to do. But like I said, there's levels to this game, and not everyone's at this level. It took me over 10 years to get to this overall level where I've been doing this. If you study the overall history of this channel, you can see the evolution and how I've adapted and how I've become better over time. If you actually watched all the fucking videos, I literally used to just get in and get out using like this 1 minute chart trading strategy. I used to just sell so fucking quickly, man. But once I figured out the harder cards and just eliminating distractions, eliminating negative people, and just leveling up in the system that I have, it's just been nothing but uphill in terms of the trading, man. It's just, this is the best I've ever been at in terms of trading. Like I said, you can study the evolution of this overall channel. If you're serious about trading with us, it's the first link down below within the description. I will see you guys tomorrow within the chat.